everyone, good morning. 11 o'clock, it's time for Buy Now, Sell Now. But this show this time is not just any other day, it is a Children's Day special. That's right, it's 14th of November and we at ET Now are celebrating this day wholeheartedly, not just with kids, but of course with all the adults. It's always important to keep the child inside of you alive. But for now, for today's show, of course, it's going to be dedicated to all the parents out there with young kids, with slightly older kids as well, who are worried about the costs moving in the direction that they are moving in, and that's only upwards. How to manage your child's finances, how to secure his or her financial future, that's what we'll aim at helping all of you out with. Our phone lines are going to be open for the next 1 hour, so please do call in. We're going to be taking live questions and queries, and joining us on the show is none other than Lakshmi Iyer from Kotak Mutual Fund. So stay tuned, it's going to be a busy 1 hour that we have for you today on the show. But before we proceed with Buy Now, Sell Now Children's Day special, let's just take a look at what the markets are up to and what are the top headlines at this hour. For the Nifty, it's a 0.25% higher, 10,606 on the counter. The Sensex too, a similar momentum seen over there. The broader markets are finally showing a bit of outperformance, so the mid-cap index is higher by about 0.5%. But like I said, let's take you through the top headlines at this hour, and the green on the screen could be attributable to the drop in crude prices. We're wading deeper into the bear zone with Brent dropping 6%, US WTI dropping 7% overnight with Brent at 65, US WTI at $55 per barrel, and the crude full collapse in turn is impacting all the crude consumers today in trade. But the other big headline apart from crude is, of course, the Binani cement case, which you just, of course, heard out. The NCLAT has ruled that it's Ultratech's bid that is going to be the winner for Binani cement. They reject Dalmia Group's plea on bids for Binani cement, and it's going to be Ultratech that's finally the big winner on this very important NCLAT case. Here's an MSCI index rejig too. They've announced changes to their global standard index. Siemens India as well as Tata Motors A have been deleted from the MSCI India domestic index, whereas Divi's Labs has been added to the index. So that's a key rejig that you should watch out for. And of course, it's the last day of the earnings season when the FAG ends. So some very important numbers that are expected. We have from the Nifty set, M&M as well as Grasim that you should watch out for. And among other important earnings, it's also Motherson Sumi, Vodafone India as well as Thermax. From earnings expected to earnings delivered, Ashok Leyland came out with its Q2 numbers. It was a mixed bag. However, the other big important factor for Ashok Leyland is going to be the fact that Vinod Dasari, the MD and CEO, has stepped down from his post of 14 years, and it's Dheeraj Hinduja who's going to take over as an executive chairman. CLSA, however, has maintained a sell on Ashok Leyland with a target at 100 rupees. The other big headline is Zee Entertainment. Promoters SL Group are planning to sell 50% of their stake in order to perhaps make the company more technologically advanced. They're looking for a strategic partner for the same, and the deal is expected to entail an investment of a little over $1.2 billion. Here's a shocker from Sun Pharma. It's a loss that they've posted in the second quarter on the back of a one-time expense. It's anemic US sales as well as India sales that has taken a toll on their earnings. Macquarie has a neutral stance with a target at 585 rupees. But on the flip side, what's done well has been Tata Steel. It's been a stellar quarter. They've reported a profit, a threefold jump in the Q2 profits. Of course, there was that small one-time exceptional gain. Revenues high by 34%, margins at 20.5%. So all across, it's been a beat on the numbers. Well, there you have it. Those were your top headlines at this hour. But like I said, we'll just talk a bit about the market. So let's bring on board Manas Jaiswal then to talk about the technicals of the market as they stand at this point of time. Manas, good morning. Thanks for joining in. It's 31 points higher for the Nifty, and we do have oil supporting the Nifty, I suppose, today in trade. 10,600 on the cards. What's the way forward?
Yeah, I believe that the consolidation what we have seen in last 4-5 trading sessions is going to over soon, and Nifty will cross the resistance of 10,650. And the possibility is very high that this time Nifty can even break its 200-day moving average, and it can go and test its 100-day moving average, which is placed near to 10,800. So even from current levels, you can see almost 200 points rally in Nifty. So if you're a trader, then even at current levels, you can create some long position in Nifty and keep your stop loss below 10,500.
Manus, on that note, let's also get in some of your technical picks. You have an all-buy list, I suppose. Indigo, of course, has the crude factor playing out. Bharat Finance and Bank of Baroda. What's your rationale?
See, in Indigo, the trend is very clear now because stock has been making higher tops and higher bottoms from the level of around 720. Few days back, stock broke its 100-day moving average, and today the stock has broken its 200-day moving average with great volumes. So I think this rally is here to stay, and the possibility is high that stock can even test 1110 in the coming days. So take a long position here with a stop loss of 1019. Second is a buy on Bharat Financial, where it seems that stock has made a strong base near to 850. I think just few weeks back, stock made a piercing pattern on the weekly chart. Now, since stock has broken its 50-day moving average today, I believe that stock has potential to test its 50-day moving average. So here, my target would be around 985. Stop loss should be 924. And lastly, the buy call on Bank of Baroda. See, it seems that looking at the charts, I believe that in a day or two, the stock can give a breakout above 113, 140 levels, which is its 50-day moving average. And the possibility is high that the stock can test its 100-day moving average in next 2 to 3 trading sessions, which is placed near to 121. So I think you can take a chance at current levels, take a long position here, keep your stop loss below 107, and your target would be in the range of 121 to 125.
Okay, well, there you have it, some top technical picks. But right back with Children's Day that we are celebrating right here on ET Now with Buy Now, Sell Now. Like I said, our phone lines are open. So call in and send in all your questions and queries. We'll be answering them live. And on that note, let me introduce our guest for today. It's Lakshmi Iyer, the CIO of Fixed Income and Head Products with Kotak Mutual Fund. Lakshmi, always a pleasure to have you. Good morning. Thanks so much for joining in on ET Now. And I'm going to throw just a generic question at you first. For all the worried parents out there, especially the new parents, I must add that, because I'm sure they have a mountain of worries ahead of them, panicking perhaps given the fact that every single day, and of course off recently, the other trouble has been the higher crude prices. So expenses will only keep rising, and the only way to stem that is perhaps increase your income, but that too sometimes is dependent on external factors. So if you could just dole out some interesting tips for parents to be, or just new parents, on how they should essentially, without compromising their lifestyle, plan finances for their kids.
Sure. Hi, good morning to all of you, and indeed a very, very happy Children's Day. And I always believe Children's Day is for children as well as adults, because ultimately dil to bacha hai ji. To specifically answer your question, yes, there is a lingering concern in the mind of most parents and also as individuals, specifically parents, new parents as well, that with the current expenses, and these expenses are only likely to mount, how should we really plan finances? More importantly, are they really aware of it? So one interesting piece of data, we all talk numbers, but very simple data to start off with, assuming you are, a family or a couple right now having an expenditure of maybe 40,000 rupees per month, just because of an inflation which is going to keep eating into this, on a year-on-year basis, this number has the potential, this 40,000 can go almost 3 times in less than 20 years. So which means a 40,000 rupee expenditure, and you are assuming that absolutely everything is fine, it can actually go up to as high as 1,20,000, assuming the same lifestyle. And therefore, the essence or the importance of ensuring that your income from your investments should be higher than your expenditure assumes a lot of significance. And therefore, I say that it's very, very important to start planning early so that you don't have any negative surprises going into the future, because inflation is something which is inevitable. Whether you like it or no, it's going to be part of your lives.
Fair enough. So we're going to try and answer all the questions we've received from parents, whether they should tap into their retirement corpus, whether they should take an education loan, whether they should buy gold for their daughter, whether they should invest in FDs. All of those questions, we'll have Lakshmi to answer them. First up, we have a video query received from Mahindra Sham, who is a teacher, and she has a 10-year-old son who, well, is attempting to be a YouTube sensation, Ayan Sham. So let's listen in to what her query is.
Sham and I have my very own YouTube channel about dinosaurs.
Hi, I'm Mahindra Sham and I'm the pre-primary teacher librarian at JBCN International School. Since Ayan has been very small, he has been very passionate about animals, specifically dinosaurs, though we don't know if that's what he would want to pursue since he's only 10 yet. My husband is a businessman and me being a part-time worker, we find little time to sit and discuss finances, especially related to his future education. And education costs today have only been on the rise. You almost need 1 crore for any kind of education abroad. So my question is, how much and how should we save? Please help.
Well, point taken. And yes, education abroad only goes higher almost every year, and Lakshmi, added to that is the weakness in the rupee, which once again increases costs for Indian parents to send their kids overseas. So in such a scenario, Lakshmi, of course, her son is only 10 years old, so he does have, I suppose, another 6-7 years before he could consider any education abroad. How much approximately, and how do you think they should save and invest their money for it to grow?
Sure. So for starters, Mahindra, and this is the message to Ayan also, since he is a fan of dinosaurs, inflation is today's dinosaur. And while dinosaurs have actually become extinct in real life, trust me, this inflation dinosaur is going to stay for eternity. So if you have to plan to slay this dinosaur, whether it's in gaming or whether it's in real life for your investments, specifically given the fact that you have an education to look forward to, it's not going to be easy task. But let me tell you, it's not going to be impossible as well. So as I mentioned to you, if you assume that you have a kitty of say a 1 CR that needs to be planned maybe say 6 years or 7 years down the line, depending on whether Ayan wants to do undergrads or maybe higher education outside of India, or for that matter within India. Outside India, you have to worry about the rupee as well, which I'll come to in a bit. My sense is, do a reverse working, and systematic investment plans are one of the best ways, according to me, to be able to plan through this. And I say this because even I have a son who is age 13 and he has an SIP in his name for the past 5 years. So that you plan it in such a manner that by the time the age for which you are planning this education, so therefore the planning becomes very important, you actually have the desired kitty. And fortunately these SIPs are in equity funds, which have a tendency to give you, of course there is nothing assured, but they have a tendency to compound itself over the 5 to 10 year kind of an investment horizon. Additionally, on the rupee, if assuming you're doing this education outside of India, again you cannot predict the tenure or the direction of the rupee with high conviction. But if you look at the past 15 to 20 years, the dollar rupee, or specifically the currency which is INR, has tended to depreciate on an average 2.5 to 3%. So given that kind of a pace, we should ensure that this investments more than takes care of a depreciating currency as also the rising inflation. When you probably get in touch with a financial advisor, which you must do given your husband and your schedule, he or she will also help you plan out a little bit of investments overseas, which could be a lump sum, a one-time investment to take care of this dollar rupee depreciation. But I think this is the way you need to do. Start right now. Don't really delay your investments in SIP. That would clearly be a prudent way for you to plan his education.
Well, Lakshmi, you said it perfectly. Inflation certainly is the dinosaur in today's ages, and it's roaring. And how so? Systematic investment plan, that's the way to go according to Lakshmi. Reverse plan it. Aim at what you're looking to collect. 6, 7, 8 years down the line, and then decide how much essentially would you need to put aside from today. And you can invest it in a systematic investment plan, which would not even require you to put in the entire amount at one time. So that's the way Lakshmi is essentially asking you to go about. Okay, we've received an email, in fact, right now, and it is from Pankaj Tanna. Pankaj says he has a 6-year-old child studying in school. They have started investing for the education, for her education, and they have opened a bank account as well in her name. They want to know if there are any other asset classes that they can look to invest in for her future. It's just a bank account at this point of time, Lakshmi, only 6 years old, so I suppose the time horizon is longer. Lakshmi, I suppose for such young children, I guess parents could take on a little more riskier asset.
Absolutely. I don't have a doubt at all in my mind. Again, a little bit of numbers, not to intimidate you into the world of finance, but to initiate you more meaningfully into the world of finance. If you take a track record of 15 years, and since your son is 6-year-old, you have a long time span. A typical traditional mode, a bank investment, like you mentioned, has the potential to give you a return anywhere in the range of 7 to 7.5%. And this is, again, as I said, I'm quoting you last 15-year data. Gold has given about 10 to 11% returns, but equities, which is where I keep harping about all the time, given the kind of longevity that these kids have in terms of their timelines of investments, have delivered close to about 15% over the last 15 years, and this is all annualized returns. So therein lies your answer. I think it's time to wean out from traditional mode of investments like banks, specifically for children, and instill the value of investing into an asset class called equities at this point in time. And if someone says, oh, he or she is only 6 years, isn't it too risky? I would say that is the time to take all the risk. In fact, if I were to, step one level forward, even if your child is in the womb and at conception, immediately after that, also if you actually plan for investments into equities, it's absolutely acceptable. So I think equities would and should be the way to go for you. So move out from your bank into the world of equities.
Okay, excellent. Equities is the way to go. Your child is young, longer time horizon, take on some more risk, and returns as well will definitely be more if the risk is more. So it's a chance you'll have to take. Lakshmi, stay on with us. We'll take a very short breather right here on Buy Now Sell Now Children's Day Special. But come right back. We've lots more queries that we're going to be taking on. Welcome back to Buy Now Sell Now right here on ET Now, where we are celebrating Children's Day in full throttle. The markets, meantime, have bounced back very smartly from the low that they just about a couple of minutes ago touched. Crude prices supporting the Nifty today in trade. But again, 0.1% higher. So nothing very substantial in the way the markets are moving. We've totally come off also from that high point of the day of about, I think, 10,650 if my eye serves me right. But let's continue with the questions and queries we've been receiving. Here we have Seema Rangwala. She has a daughter, Alara Rangwala, who is just about 1.5 years old. So let's listen in to what her question is.
Hi, I'm Seema Rangwala. I am a psychologist and I am a part-time working mother. Alara has been receiving a lot of money since she was born as gifts for festivals, for her first birthday, and I'm sure she's going to receive a lot more money for her upcoming and following birthdays. What do I do with this money that I can invest it in a way that I can really see it grow and that she'll have something on hand when she gets older, when she's of college age, and she can make real use of it for her education or for her future life purpose.
Okay, it's a very pertinent question that Seema has, and you know, Lakshmi, given the fact that the occasion of Diwali was just behind us, I'm sure a lot of children have received a lot of money from their grandparents and relatives, which I'm sure they want to blow away in candies, but parents must have picked up that money and, you know, just perhaps put it in their closet. So, Lakshmi, what would you advise? How should this money essentially be invested? What are the best investment avenues? This money may not be that large, you know, in terms of their chunkiness, but still over the years, maybe kids like Alara may have accumulated a lot of money. So what should they do? How should parents invest this money?
You know, whether we are kids or adults, we all love receiving gifts. It's just that kids receive more of, you know, money, you know, more of gifts in cash, and few of us even have stopped receiving it in kind. But I think the beauty of these gifts are that, as Seema rightly pointed out, she wants to see it grow. And I think that's what we all would like to have. And since this money typically comes in lump sum, you know, there is no regularity with respect to the amount or the periodicity. So it could be a birthday, it could be a Diwali, it could be just Children's Day, for example. It could be various such occasions. What I would suggest is take this entire lump sum and put it into any diversified equity fund or a balanced fund, because balanced fund, or maybe it's now called you know, the aggressive equity hybrid funds. So these funds predominantly invest in equity markets, and funds like the aggressive hybrids also make small tail end allocations to fixed income. So the benefit or the advantage of making such lump sum investments is that and since your child is young, there is a reasonable clarity that you will keep getting money over various occasions, but lump sum would be the way to go for you. And there used to be earlier, you know, these days where kids used to put this in their piggy bank. My son used to put this in the piggy bank, and then we opened a bank account for him, and then money used to go there. But I think as you know, financial literacy is creeping into children, because you know, financial literacy is being introduced in schools, I think the power of compounding has been initiated at a young age. So I would suggest a combination of either a diversified equity or an aggressive equity hybrid fund and a lump sum investment over a systematic investment to take care of this money.
Okay, yes, I think that's the best part of being a child, right? You get more money, at least from an adult's perspective. But you can't use that. Yes, invested in diversified equity funds and balanced funds. That's a strategy Lakshmi would suggest adopting when it comes to this corpus of funds that kids do tend to accumulate from their grandparents, from their relatives, on first birthdays, second birthdays, different milestones in life, invested in these equity funds. And Alara is young. Again, time is on her side. So she does have a longer term time horizon. Risky assets is the way to go. But Jay, before we just take on board a next query, it's important to address Jindal Steel and Power came out with its Q2 numbers. Let's bring on board Mr. Naushad Ansari, the CEO of the steel business, who's joining us right now on the show. Mr. Ansari, congratulations. It's been a good set of numbers for you. A super jump on the top line, exceeded analyst expectations. Tell us what has been the average net sales realization and what's the growth in volumes as well.
So if you look at, I mean, just to give brief as to what the kind of results which we have for this quarter too, despite this quarter being a monsoon quarter, and traditionally, you know, this is always a quarter where the production as well as the sales are down. But this quarter we have been able to do reasonably well. This quarter our consol EBITDA has gone up by more than 60%, and on a standalone basis it has gone up by about 85% or so. So the EBITDA on a consol basis is 2,200 plus, and on a standalone basis it is 1,450 crores. So one of the things which has happened is, I mean, this is despite the fact that the raw material prices have continuously gone up, and the NSR has been, you know, the sales price has been, you know, not going up in the same way. It has actually come down in some cases. So what we have done is simply because we have ramped up our production better in Angul, and also we have managed our cost better. So if you look at the two levers, primarily we have you know, produced more, and our cost has been contained reasonably well. So these are two ways to manage this.
Okay, Mr. Ansari, you mentioned that in some pockets prices had been a bit weak. So, yeah, overall they were still stable in the September quarter, but I think internationally prices have been dropping from October onwards. Is that what you witnessed?
So if you look at the NSR, up to September it went down. October we were hoping that the prices will go up substantially. It has marginally gone up, but the market is as of now look like that the prices have still softened a little bit. So that's a challenge which we have to manage with. We are very, very hopeful that going forward, as now that the Diwali and everything is over, the market will start picking up, and we expect that the NSR should continue rising from now onwards, because it's already come down quite a bit, and especially in the construction area, in TMT, etc. We could see that there is some softening in the prices. So that's the way it is. We hope that as far as flat is concerned, we don't have much of an issue. As far as flat is concerned, the NSR remains okay. But as far as long product, especially the TMT, etc. is concerned, it has gone down, and we're hoping that it will start coming back to the same level where it was somewhere in around June or so.
How has the rupee depreciation impacted you? Because you do import a decent amount of your raw material requirement, and what's the rise in costs you witnessed because of that?
So you see, there are two folds rise. One is on the iron ore prices, which have gone up substantially, close to about 1,500 rupees per ton of iron ore, and also because the coking coal went up simply because of the exchange rate going up, and also the coking coal prices also went up in the market. So in both cases combined together, the negative impact was close to about 3,500 to 4,000 rupees per ton kind of a number. That's the way it was.
What's the update when it comes to the restructuring exercise to manage that 45,000 crore debt on the books? We heard a lot about the restructuring plan. Is there any asset monetization plan as well for the overseas assets?
So yes, I mean, the plans are already afoot. We are in Oman, as we had already mentioned, that we have engaged a company who is working on this. It would take a little while, before we actually come up with anything very definitely, but we are certainly seriously looking at a part of Oman being monetized. The other assets which are there, some of the assets in Africa, we are also looking at it. But as of now, as and when any important conclusion takes place, we will certainly come back and communicate to the market. But right now, yes, there are a number of efforts which are on. But in any case, all our debt, we are totally current, and even just simply based on our regular operations, we are able to manage the entire debt, both in terms of interest as well as the repayment. So there is no default or likely default anywhere at all, be it Indian operations or outside Indian operations.
Okay, Mr. Ansari, great speaking with you. Good luck with your future performance as well. Congratulations for what you've delivered in the second quarter. We wish you all the very best. Moving on, Motherson Sumi has just come out with its numbers, so we'll address that as well. Important company, of course. Take a look at what they have delivered on the profitability front. I think it's coming in. The consolidated profit has come in at approximately 371 crore rupees. This is the profit attributable to the shareholder. So that's a 371 crore rupees. But the overall profit after tax has come in at 495 crore rupees. We have the revenue figure as well that will just pop up on your screens in a bit, and it's come in at 15,105 crore rupees. That has managed to come in above expectations. Our own ETNA poll was putting the figure at 14,900 crores. So that, I think, has still managed to come in a little above expectations. This is, of course, on a consolidated basis. If we have to look at MSSL standalone, the revenue is at 1,996 crore rupees, a growth over there. SMR at 3,158 crores. SMP at 6,966 crore rupees, and then we have PKC at 2,270 crore rupees. So that's just a quick update on what the individual segments for Motherson Sumi and the different entities within Motherson Sumi have done. Let's just compare it with what the ETNA poll has been for a Motherson Sumi. Our own poll, like I said, on the bottom line front, I think it has disappointed a tad bit because we were expecting the number for the bottom line of Motherson Sumi to come in at 512 crore rupees. That was what the poll was, but the number has come in below that. Like I said, overall profit has come in at 496 crore, but profit attributable to shareholders has come in at approximately 371 odd crore rupees. That's the figure that we have for you on your screens. 15,100 crore rupees on the top line. That has come in slightly above expectations. Remember, the other key factors that we are watching out for Motherson Sumi. First up, an 11% growth. I think they've been able to exceed that. But do remember, we also have that 7.5% odd rupee depreciation versus the euro and the strong growth in the domestic business. Both of these factors were expected to provide a boost to the top line. The rupee depreciation certainly has done very well. So that is something, has boded very well for Motherson Sumi. So that as well has done its bit, contributing to the overall top line growth of Motherson Sumi. Like I said, it's coming at about 15,100 odd crore rupees. If I put that against what they did in the corresponding quarter, the growth has definitely exceeded our own expectation of 11%. A quick calculation shows 12.5%. So not bad over there. Profit, I think, is slightly disappointing. In just a bit, the margin figure as well will appear on your screen. Remember, the EBITDA margin that we were calculating is 9.5%. And that is something that we'd want to watch out for. Okay. The EBITDA figure has disappointed, 1,300 crore rupees. So once again, as I think has been the case with most auto or auto component makers, year two, the margins have disappointed. It has come in, EBITDA has come in at 1,300 crore rupees, which naturally would mean we are looking at a substantially lower margin. 9.5% was our own poll. I'm just going to do a quick calculation of what the margin has been this time around. 1,300 crore EBITDA, 15,000 odd crore rupees is what the company has delivered on the revenue. So that puts the EBITDA margins at 8.6%. A bit disappointing. That has been the trend for most auto majors at this point of time. So there you have it. Motherson Sumi, quick chart check. 1.8% higher, spike down, spike up, and that's where we are settling at around 169 rupees. Well, that was an earnings wrap very quickly. We had JSPL, we had Motherson Sumi. Let's get back to answering all the queries that we've been getting in on this occasion of Children's Day right here on ET. Now, you just heard out what Lakshmi had to say when it comes to Seema's question. Now, let's move on and bring on board Ami Merchant's query. She is a teacher and she has a 7-year-old daughter, Suha Merchant, who interestingly at this tender age has already developed herself as an entrepreneur. Listen in.
Hi, my name is Ami Merchant.
And my name is Soha Merchant. I make my own bath products in the name of Mishkino.
Soha loves designing and making these bath products right from the time she was little, as she saw me making them. She managed to even sell them and make a tidy little profit. My question is, how can I invest this money for a future education?
Well, what can we say about the enterprising nature of the kids nowadays? 7-year-old and she already is into the business of making bath products. Very interesting. I wonder if using them would make my skin as amazing as hers, but well, that's a question for another time. But Lakshmi, she's making a tidy profit as well out of this little home business that she is running along with her mother. Only 7 years old. How should she go about investing this money, this little profit that she's making? Lakshmi, please give your advice.
Sure, I think Soha is doing a wonderful job that of being an entrepreneur at such a young age, so much so that she understands what is the cost price and therefore what's the profit. So I think that's very fantastic. My son also does this. He makes slime and he tries to sell the slime and make some money out of it. Not very successful because studies don't permit him to do that. But I think one intrinsic thing about whether it's slime or whether it's bath products, specifically bath products here because Soha makes them and she understands them well, is that they dissolve in water, and that's when the fragrance or the beauty of the product unfolds. Now, unlike the dissolving nature, the money that you make as profit, we cannot let that dissolve. So how do you let that grow? Because when you make it grow, that's when you get more money for your future, which is for education or probably setting up an entrepreneur scale kind of a thing in future. So I think what is the need of the hour for Soha is that you make an asset plan. Like the way when you make your bath product, you decide how much of baking soda, how much of oil in the right proportion. I think what you require is a proper asset allocation in the right manner, with obviously an overweight of equities. Since the nature of the profits can be high, low, can be disproportionate, it's lumpy in nature. I think the advice would be to go in for lump sum, make one-time asset allocation, and with the help of an able financial advisor, review that on a periodic basis. I think that would be the way forward. But I think asset allocation will be the key for you going forward.
Very interesting advice. Profits, of course, are not consistent. One time it may be a great time, one time may be a great period, the other times it may be a bit of a lull. So a lump sum asset allocation is what Lakshmi is advising. And you know, Lakshmi, with your 13-year-old and Soha at 7, I think we both must be wondering what we did when we were at their age, probably just goofing around, I'm sure. But that's, I suppose, the specialty of kids nowadays. Let's move on, and we have got another email.
Climbing trees.
Absolutely. But let's bring on board another question. We've just got an email from Tarana. Okay, she has a very interesting question. She's asking, are there any mutual fund schemes that are specially curated for children? And she wants to know if she would invest in them. And are there any specific schemes that you would advise? Lakshmi, I think you'd be best poised to answer this question. What would you advise Tarana?
No, so my answer to Tarana is that yes, there are schemes which are called, say, children's plan or whatever it may be, but let me give you an analogy, and I'm a foodie, so let me give you a food analogy. A rum cake does not mean there is no flour, there's no sugar, there's no egg in it. There is a dash of rum, but the entire ingredient is not rum. So what I'm trying to tell you via this analogy, it's not necessary that only a child's investments need to be made in a children plan, because the underlying asset class is predominantly either equity or maybe some traces of fixed income. So for starters, is it mandatory or necessary that I make investments only in mutual fund schemes which say child plan, etc.? The answer is no. You can choose any diversified equity mutual fund if you want to be overweight equity or a combination of debt equity. All of that is available. The good news is that with white labeling and I would say categorizing product labeling in mutual fund industry, it has become even more easy to be able to identify, say, a large cap fund, a mid cap fund, etc. So I think go ahead, don't get carried away just by the name, make investments for your child. I think that's very, very critical.
Okay, excellent. Lakshmi, it was a very interesting conversation we just had with you. Thanks so much for joining in on this occasion of Children's Day with all your very interesting analogies to help make it easier for parents as well to understand on how they could invest their various sources of income into different schemes, into different assets to be able to grow it for their children. It's of prime importance, of course, to do that and use the occasion of Children's Day as an excuse perhaps to go ahead and secure your child's financial future. Lakshmi, thanks so much again for joining in. Well, we'll very quickly take a very short break right here on the show, but don't go anywhere. We have a very interesting conversation that's going to come up between Feroz Aziz and 28th graders of JBCN International. Come back. Welcome back. You're watching Buy Now, Sell Now on ET Now, where we are celebrating Children's Day. We always say teach them young, whether it's physics, chemistry, or even money management. And that's what we at ET Now aim to do on this occasion. So yesterday, we had Firoz Aziz of Anand Rathi Private Wealth Management, who went over to JBCN International to give the students of the school, 7th and 8th graders and 9th graders, a lesson on how to invest, what exactly are markets, and how to manage their money. And boy, did these students grill Firoz with some very interesting questions. Listen in to a slice of that session.
Most of the things in life could be more expensive than you can afford today. So what will you have to do? You will have to accumulate it, 50 after 50 after 50, so that it becomes 2,000 rupees, and then you can buy it. So what is this process called? This process is called saving. This process of accumulating money to buy something at a later date is called saving. Right? Now, when you save it, you can keep it in a piggy bank, right? You can put those 50 rupees to accumulate it in that piggy bank, or you can make that 50 rupees grow. The process of growing it is called investing. How can money grow? Right? If money could grow, it would be phenomenal, right? You just have some money and you leave it around and it keeps growing. How does it grow? When I take this 50 rupees, let's assume I lend it to a friend. I lend it to a friend, and he tells me that, Firoz, you're lending me this 50 rupees, you're being so kind. After 1 year, I will not just give you your 50 rupees back, but I will add 10 more rupees to it and give you 60, because you're being so friendly to me. You're giving me 50. So after 1 year, how much would I give him? Well, he would give me 60 rupees. So what happened? Instead of leaving the money in the piggy bank, I made sure that the 50 rupees is used by my friend for how much period? 1 year. If my friend is a person who fulfills his commitment, what will he give me at the end of 1 year? 60 rupees. So what happened to my 50? It became 60. Now does it help me get my 2,000 sooner? Right? Because I'm getting closer to my 2,000. So if you put your money in a box, it doesn't grow. If you make sure that the money is utilized by somebody else, is being used by somebody else, then because he is using it, he is going to give me more than the money I gave him. This is why money grows, because you're not leaving it idle, you're making it work for somebody else. You're lending it to somebody, right? So saving and investing are a very, very important component.
Is it always, it might be risky also, right, sometimes to invest?
Super. So that's a very, very valid question. She asked us, what is the risk? If I gave my 50 rupees to my friend, what if he doesn't give it to me back at all? That's a risk. But if I understand my friend, and if I know my friend for 5 years, and if I understand my friend properly, that he is a person who every time gives a commitment and fulfills his commitment, then I don't mind giving my money to him. But will I give my 50 rupees to a stranger? No, because I don't even know whether he'll give it back to me or not. He might just take it away and vanish. So how are we going to lend to somebody? Unless I know that friend of mine for long periods of time, I'm not going to lend my money, right? So of course it is risky that he doesn't pay my money back. But if I have done my research on that friend of mine, then I would have taken risk, but a calculated risk. What do you mean by a calculated risk? A risk which you understand. I understand that this friend of mine, for example, Vinod, is a very trustable guy. And that trustable guy will pay me back my money. If I'm very confident, and if I have done that with him 2 or 3 times before, and he has always given my money back, then I would say that's a lower risk. Let's assume I don't have any friends. Okay? The situation is not as bad as I sound. If I
Okay, some very interesting questions thrown in by the students, I must say. Students nowadays just getting more and more enterprising, no exception right here between the 7th and 8th graders. Unfortunately, we could not play out the entire conversation. Certainly was a very interesting one. But we'll wrap it up on this very special edition of Buy Now, Sell Now. Thanks to all of you for tuning in. I hope you enjoyed the program as much as we did, compiling all of this together. Wishing you all a very happy Children's Day. Coming up next is Markets at Noon.